Hi, I am Patty Sanders, and I'm here today with Michelle Post from Sierra Pacific Mortgage, and we're bringing to you the Mortgage Minute, episode 4, all about mortgage assumptions. So, Michelle, you've been in this business a very long time,
Yes.
and mortgage assumptions are something we have not seen in quite a while because of the wonderful rates that we've had over the past many years. But when I first came in the business, we did a lot of mortgage assumptions. And so I think this is a viable option moving forward as our market shifts and changes a little bit. So why don't you give us just an overview of mortgage assumption and how that works?
Okay. So there are many types of loans. There's the conventional loan, and then there's government-backed loans, FHA, VA, USDA. Assumable loans are only the government-backed loans. Conventional loans cannot be assumed.
All right.
Basically, you buy your client's house, your seller's house, but you didn't know you could also take over their mortgage. And you can if it's a government loan.
Okay. So what would be the benefit today if I were a home buyer and I'm looking at a house, I love it, I want to buy it, and that homeowner has an assumable mortgage? Why would I want to consider that versus just going and getting my own mortgage?
Well, the last couple of years have been historically low on interest rates, and they are creeping back up a little bit now. So if, say, a seller has a 2.5% 30-year mortgage, they've only owned it 2 years, with FHA, VA, or USDA, the buyer can take over the remaining years of the note and then just pay the equity to the seller for the difference between what's owed and what they're wanting for the house.
So I would get the benefit then of that 2.5% mortgage
Yes.
versus what I would get in the market today.
Yes.
Okay. Well,
That's a benefit.
sounds like it might be a good deal or
Yes.
something to look at.
Yes.
So tell us more about it.
So on an FHA loan, the minimum down payment is 3.5%. On an assumable loan, you wouldn't have to come up with that 3.5% unless you needed to pay the equity to the seller.
Okay.
And honestly, values have gone up so much over the last couple of years. That's something you definitely need to talk with your seller about. The realtor needs to determine what the equity position is to make sure that it's a benefit to both parties.
Okay.
FHA is the 3.5%. VA and USDA don't have a down payment requirement. So even without assuming, there's no money down, but the rate can make such a huge difference on the
Sure.
payment that they may want to look into that as well.
Sure. Okay. But it's not always the best option.
No, it's
Okay.
not.
So it sounds like number one, if a homeowner's thinking about selling their home, they need to explore what kind of mortgage they bought that home with and if it's assumable and
Yes.
what all those terms are.
Mhm.
And then number two, it sounds like if a home buyer's out there in the marketplace and they find a home that might be assumable, it may or may not be the right thing to do. So they should go sit down with a mortgage loan officer
Yes.
and kind of weigh the options
Yes.
between the assumption versus a new mortgage.
Yes. So we can get a copy of the note from the seller if they're willing to do that to determine how much the savings would be, how much the down payment difference would be. If the client is having to come up with a lot of extra out of pocket, it may be better just to go ahead and get their own mortgage versus assume.
Okay.
And veterans with VA loans, if a civilian were to assume the loan, then the veteran would lose their eligibility for future VA loans until that was paid off.
Okay.
So it would be best if a veteran were to allow someone to assume their loan that they were a veteran so they could take on their own eligibility.
Okay, awesome. Well, it's complicated. There's a lot to it. So it's not just a one size fits all
Right.
answer.
Right.
So as always, reach out to your mortgage professional and get a little bit of advice. But assumptions, they're out there. They're going to be a good option moving forward. So have those conversations with homeowners before they list their properties for sale, and also make sure it's an option for all the home buyers out there. So,
Yes,
all right.
indeed. Thank
Michelle, thank you so much for
Yes, of
joining us
course.
today. And until next time, this has been the Mortgage Minute.